Well, I think that as of Friday, the presidential predictor, which was down ever so slightly between July 31st and October 31st, implied but did not guarantee a Biden victory. So maybe we are seeing sort of a reflex rally on Monday because the market fell 5.5% last week. And I think that it probably got oversold, and therefore, with the election now being a day away, with not much that really can happen between now and then because of so many mail-in votes, that I think investors are just taking advantage of the market being oversold. Well, the sector performances today, I think, could be misleading. We do find that the growth sectors are headed lower, possibly because they continue to be overbought relative to the value sectors. We do see energy materials doing quite well, but that could be because if we do have a Biden victory, there is the likelihood that there will be stimulus and there will be infrastructure spending. And if that's the case, that could prove additional global economic activity, which would increase the demand for energy as well as for materials. So, give us some infrastructure spending and more juice going into the economy. And I think that would end up benefiting value stocks also because interest rates might then have to rise in response to the expected increase in inflation. Well, first off, I think that because the polls, or at least the election itself, it looks as if it's going to be very, very tight. We probably will not have an answer by the end of election day tomorrow. That it could take several days or maybe even weeks before a victor is finally announced. So yes, things could go either way. One could assume that maybe we do see a sell-off in November because of a Biden victory as investors look to harvest some taxes, harvest some capital gains at a much lower tax rate. But then again, if there is stimulus, if there is a infrastructure spending plan, then that would boost economic activity and cause the stock market to rise. So I just say, because of all of the differences of opinions, the differences of possibilities of the outcome, whether it is all related to a Democratic victory or a surprise Trump re-election, it's another good example of why you should not try to play the expected event. Rather focus on your long-term investment plans, because you would end up playing whack-a-mole, a popular amusement park game, and so it would just wreak havoc on your emotions and on your portfolio. So stick with a long-term plan, and our belief is that we will likely see a double-digit increase in the coming 12-month period. If you have cash on the sidelines, don't feel the rush, the need to invest it right away. Take some time to decide what exactly you want to own. And if the market does head lower, purchase those stocks that you felt you missed out on in the prior rally, and take advantage of lower prices and possibly higher dividend yields later on.